Laundon. I'm the Chief Analyst of Cabot Small Cap Confidential and Cabot Early Opportunities. I'm here with your Cabot Weekly Review. It is Friday, October 11th, and it's approaching 1 o'clock p.m. Eastern Time, which is a little later than we typically do these videos, but it was a busy morning, so it's just the way it shook out here. So as you can see, we have a chart here of the S&P 500, which is hitting another high today. Of course, we hit highs on both the S&P 500 and the Dow earlier in the week, and another one today. The market is being pushed higher by a lot of different areas, but technology and financial stocks are two standout performers. And I think this morning, we'd had pretty good reports and reactions from names like JP Morgan, Wells Fargo. So a lot of bullish sentiment out there. I think another thing that's interesting about what's going on with the market right now is that the broad market is hitting record highs even while assets held by retail investors and institutions and money market mutual funds hit a record high. So of course, money is sitting in those types of assets because yields are still pretty attractive, and theoretically those are going to start to come down, but we'll get into the yield curve and what's going on there in just a minute. But again, it's kind of interesting to take note of that. Now, with the market hitting new highs, let's do a quick gut check on valuation. The forward S&P, the forward PE of the S&P 500 is about 21.7, so definitely not cheap. The market traded with a valuation in this neighborhood during the pandemic bull market for a bit, but it's also not in nosebleed territory. Back in 1999, the S&P 500's forward PE hit 25.5, so that is kind of the red zone. We don't want to get there, so just kind of puts that in context. Now, of course, valuation is a reflection of the relationship between price and expected earnings. We know the price, pretty straightforward, it's right here on the chart. The S&P 500 right now trading at 58.02. Now, what about earnings? So I just checked this morning. Earnings in the S&P 500 are expected to hit 24.09 this year and 27.63 in 2025. That implies accelerating earnings growth, moving from about 9.3% growth in 2024 to about 14.7% in 2025. So again, that is part of why investors are leaning into this market, even though it has a slightly elevated forward PE. Let's move on to the NASDAQ. Not going to spend too much time here. I just wanted to note that no record highs yet, but certainly getting there. We'll move on to my favorite area, small caps. The small cap indices, so the Russell 2000 and the S&P 600, have really been pretty uninspiring over the last 3 weeks. We have the S&P 600 right here, which of course is having a decent day today. But again, you go back 3 weeks and we're down from there. I think this is sort of odd given that it was almost exactly 3 weeks ago that the Fed cut interest rates by 50 basis points. Theoretically, lower rates should benefit small caps given their higher exposure to variable rate debt, which requires lower interest payments as rates decline. But if we sort of try to solve this riddle and we look at the yield curve, which I think kind of helps us do that, we can see why there's a little bit of a lack of momentum with small caps. So here we have the yield on the 10-year, and as of today, it is at about 4.08%. We go back to about 3 weeks ago when the Fed cut, and that was September 18th. So here we are right here, and the yield was 3.7% roughly. So the yield has gone up over the last 3 weeks on the 10-year, even though the Fed cut. So why is that happening? Really, it's because we have had pretty good economic data, especially when it comes to jobs, which are likely going to look worse soon because of the hurricanes. But again, like if we look at just like a normal trend, jobs have been pretty good. Strong economic growth should be increasing the odds that the Fed is going to be one and done when it comes to rate cuts this year, or at most, maybe it'll cut one more time by 25 basis points. But that is a different scenario than investors expected in the wake of the September FOMC meeting. And it's also not the scenario that is in the cards right now if we look at expectations for the federal funds rate. So I just checked those a little while ago. The market is estimating an 86% probability of another 25 basis point cut in November, and then 78% probability of yet another cut in December. So I'm not sure if that's really how this is going to shake out. Obviously, nobody really knows, but my 2 cents would be, I think it's wise for investors to consider the possibility that it'll be 0 rate cuts for the rest of the year, or maybe one more 25 basis point cut at the most. Obviously, I'm not a Fed member. What do I know? But that's just my 2 cents there. A little bit of caution, I think. All right, in terms of small caps moving forward, if we look at the valuation, let's just do exactly what we did for the large cap index. The S&P 600 index really trades at an extremely reasonable valuation. The forward PE is just 15.5. That's really a big discount to large caps. It's also inexpensive relative to the historical PE for small caps when the economy is doing relatively well. So if we look at earnings expectations for the S&P 600, we see earnings rising from 673 this year to about 787 in 2025. Again, these are analyst estimates, but what that implies is 17% earnings growth into next year. That's pretty good. That's better than large caps. So I think that's one of the reasons that we see small caps outperforming today. As you know, we get data in from companies like I said, JP Morgan calling for a soft landing. If we actually get that and rates can back off, then I think small caps can really do well. I think if rates continue to stay about where they are or even climb, then small caps aren't going to really do all that much. Again, nobody knows the future, but that would just be my view on that. So let's move on to stocks, because that's mostly what we are interested in. I've been talking more and more in my advisories about software. That space continues to improve, and over the last week in particular, cybersecurity stocks looked pretty good. So we're going to talk about 12 different cybersecurity stocks. Now, broadly speaking, there has been an uptick in analyst expectations. They see growth reaccelerating for a lot of these stocks. I have 12 names here ranging from small caps up to large caps. Again, none of these are official buy recommendations, and since I have 12 of them, I'm going to keep it pretty high level. We're just going to take a look at the charts and go from there. So we'll start with the companies that have market caps under 3 billion, starting right here with OneSpan. Ticker symbol is OSPN. Now, OneSpan has a market cap of about 600 million. I think what stands out here to me is I have this little pattern recognition tool turned on this platform, which is Market Surge, that both Mike Sintolo and I use. And as you can see, we have these consolidation phases followed by a bit of a rally on earnings for OneSpan, the last one being here in early October. And then we're sort of in another one of these consolidation phases. So we have earnings coming up, we think, in 18 days. That's the expected date, October 29th. I don't know if that's official yet, but you know, there's potential of another little rally. And if this pattern continues to hold, little rally, consolidation, then a company like this with a market cap of 600 million could do pretty nice things in the coming year. All right, SterlingCheck is the next one, STER. Honestly, this chart doesn't really excite me all that much. Market cap here is 1.6 billion, but I wanted to throw it in as something that's, I think, worth watching. This big move here back in February certainly was a eye opener, but SterlingCheck hasn't done all that much since then. Been flat for a little bit. I think it's just one to kind of keep an eye on, especially if the broader security stock space continues to strengthen. Rapid7, ticker symbol here is RPD, market cap of about 2.57 billion. Bad to worse story right here in the chart. What caught my eye is activist investor JANA Partners indicated some interest in Rapid7 lately via a filing. And again, when you have that kind of activity behind the scenes with an area of the market that's strengthening, I think things can get pretty interesting. And of course, it's a pretty small company, market cap under 3 billion. Another one to keep an eye on here is Tenable. TENB is the ticker symbol, market cap of about 5 billion. Obviously not a super strong chart, but then again, maybe we have an early move starting. Pretty low risk entry point here. I mean, you could jump in, and then if it doesn't do much, you could probably, well, theoretically, get out relatively quickly as well. But if it does well and there's a move through the 200-day line, which right now is at about 44.3, then things could get interesting. Not the best chart of the group, but that's the deal there. Rubric, ticker symbol RBRK. Market cap here is 7.2 billion. Of course, a relatively new name to the market, came public back in April and is pushing to get through overhead resistance in 40, which is where it traded up to on the day that it came public. Something to keep in mind here is that Rubric should have lockup expiration coming on October 22nd, so that would be the week after next. So there might be some higher volume around that date. But again, when you see this type of chart and a stock that is looking to break out to new highs, relatively new name, it is pretty interesting. All right, Sentinel-1, we all know this company was talked about as being one of the bigger threats to CrowdStrike a couple years ago. CrowdStrike has really put some pretty good distance between itself and Sentinel-1 as far as the stock performance goes. But here we are. We have a bit of a consolidation phase going right now, and Sentinel-1 is looking to try and break out above 26.6, and we'll see what happens there. All right, over 10 billion market cap companies. I have three here. CYBRK, ticker symbol CYBR, market cap of 12.5 billion. This one is interesting because CYBRK has just barely broken above its overhead resistance. Of course, this area of 283 was pretty solid resistance. The stock broke out and went to 293 back in August, and now is moving through that almost to 300. So if it were to continue through here, it should have a bit of room to run. And again, with this chart, it looks as though relatively stable pattern here, the pullbacks to about the 50 and 25 day moving average lines, the red line and the green line there. All right, so that's CyberArk. GENN Digital, ticker symbol is GEN. Interesting here is just how tight this pattern is. It's for the last 3 or 4 weeks. GEN, which has a market cap of 17 billion. Not really big moves, but just these nice little steady ticks higher, I think is always compelling, especially when it's above previous highs. So that is GENN Digital. And then Zscaler, ZS. Again, like a couple of the other names, not really the most inspiring chart, but the group is moving, and ZS has come right up against resistance here. I think it's worth watching the name to see if it can jump up above 208, which is where that really hefty resistance from July is going to be. And if it does, then maybe it's a buy. Depends on the market conditions at the time. Okay, we have three more. These are the bigger guys with market caps over 50 billion. Fortinet, FTNT, a pretty compelling breakout a couple of days ago. So this was on the 9th, and pretty self-explanatory. It looks to be running. So that's Fortinet, and then CrowdStrike, CRWD, market cap of almost 80 billion. Of course, we had the disaster back in July. Anybody that follows the name was pretty surprised by that. And though since then, decent recovery, and CrowdStrike has just moved through its 200-day line at about 305, and seems like there's a decent amount of momentum here, and it's got to get all the way up to 400 before it runs into any resistance. Now, last but not least is Palo Alto, the biggest on the list here today, 122 billion market cap, and it's coming right up against resistance. So I think this is somewhat similar to Zscaler, although a different chart. But again, it's one of these ones where if it can get through resistance, it becomes more compelling. Until then, just something to keep an eye on. All right, guys, so a lot of security stocks there. That's obviously what we focused on today. But if the market can keep its momentum going, I think this is going to be an interesting area to focus on, and hopefully a couple of these names are new to you, or at least they got back on your radar. You have 12 of them to go through, and hopefully there's something for you to have some interest in. Okay, have a nice long weekend, and we will be back in touch soon. Take care.